Hello, Predio Pride listeners. I'm really excited for this episode today. I'm by myself today, and I'm really excited to share some insights I've gained along my real estate investing path. Oftentimes I get asked around where to invest and how do I get into real estate, and there's a lot of different facets of it. And I'm gonna share a little bit more about my journey along the way, and certainly came with a lot of bumps and a lot of learning, but it has been a fun journey. And obviously, from prior episodes, you know that one of the foundational pieces I use with real estate is the family bank, and the high cash value life insurance is sort of the banking side, the part of the financing side. So share how that fits into the different types of real estate investing. But either way, even if you're just using money from a bank account, whatever, it still applies. And a lot of it was exploratory, and we'll go through a lot of it, and hopefully we'll have certainly much more other guests on the podcast to learn about their level of expertise in their respective areas, because it is a very multifaceted area to invest in. And so, but before I get into any details on, and what struck me too as I kind of reflect on my journey in real estate investing, is watching my son over this past summer start baseball. And he's been a decent athlete for a while, a young guy. So he's familiar with a lot of sports, but he's never played baseball formally. And he started it and tried it this year, something I've always played when I was probably 6, 7 years old. But here my son's 13 and finally started playing it. And he's playing with kids that are older, more experienced, and certainly was a struggle to begin with, very uncomfortable, but he had the courage to go do it. And I'm really proud of him for that. And certainly as I watched him get involved with the sport, and through the summer, started probably 6 weeks ago, he struggled, as you would imagine, right? This is not an easy game, and hitting a ball thrown at you, and even just having the courage to sit in front of somebody who's throwing something at you, takes some time to get comfortable. And so he struggled a bit and learning the rules of the game, even so they can be simple, but you have to kind of understand as you're in the middle of the game what to be doing. So certain strategies and just getting comfortable with the flow of the game was difficult. And so he struck out a lot, which is not surprising. And certainly frustrating, and just, learning basic mechanics. And I remember watching him even just when he's playing the infield, just fumbling around and just not sure what to do. He's just kind of hesitant. And that was happening all over the place early on in the season. But, as he progressed on his path, he started to gain a little more confidence. He was asking some of the more senior folks on the team for help, and even asking me to go practice and try some new things out. And he was really committed to doing it, and he kept on getting more comfortable. And you see the progression happen so quickly for him and in the span. But a lot of it was a credit to him for reaching out, getting help, but being persistent with it and being okay with kind of not knowing what's going on, and asking questions, and taking each of the painful portions of the journey and making him better. And a lot of it, although their season has more recently ended, they lost in a playoff game, but he was facing a pitcher that was multiple years older than him, throwing extremely fast. I was like, there's no way I'm going to hit this guy. But my son's at the plate, and he struck out, and the second at bat, he fought, and he got a walk, he got on base, and he scored a run, the only run the team scored that day. As I chatted with him afterwards, I just asked him what he felt, and he said, I just felt so, even though the pitcher was obviously extremely good and it was a challenge, he felt comfortable. He felt he was in a mode that he felt he could compete, and he believed in himself, and it's really motivated him to kind of take it to the next level. And it's amazing to kind of see that progression over literally 6 weeks. And it really reflected on, how proud I am of him and what he's done in that short window. And as I think about my real estate world, I was thinking about that too, because, a lot of people feel that real estate investing is such a daunting environment. And it really just requires people to take some steps and progress and learn, and get consult from others who had gone through that journey, to help them along the way and recognize that you're not going to learn it all immediately. And you're just kind of looking for progress and learning along the way. And it's a journey, not a destination, as we kind of often say around life. So in my world, in terms of real estate, it took a little while as a person myself. I know myself the way I operate. I do a lot of research. I trying to always learn, and sometimes that slows me down a bit. But I've learned to recognize in those cases where I do get hung up, and then eventually take action. So as it relates to real estate, I started obviously going to podcasts and joining things like Bigger Pockets, which is a great area to learn and meet other real estate investors, and going to meetups. And that's where I kind of started my journey. I went to a real estate meetup and met some folks, and then really got connected with some like-minded people and started learning about it. So my first real estate really investment was loaning money. I didn't actually own any property. So I met a gentleman who was very active as a buy and hold investor, where they'd buy some discounted properties and fix them up and then rent them out. And his biggest challenge at the time, this is after that 2008 sort of hit, and there's maybe 4 or 5 years in there where he was buying a lot of property, and I would just loan him money so he can go buy the properties cheap, all cash. And so I was loaning money from my family bank and loaning it to him for a double-digit return. But he was able to parlay, get some great deals, and then refi them out for, to get all the money back. But now he had a cash flowing asset that really he didn't have any money in. And I got to benefit from money that was just sitting in my family bank, waiting for a good opportunity. Was, able to triple my money on the interest I was borrowing from my family bank. And so it worked out as mutually beneficial. And, it was a little odd, certainly, to loan someone. I've never loaned someone money directly, but through the course of that, I really just got to know him and how he operated. And this is what I always emphasize to people, is to understand who you're investing with and the type of person they are, and get comfortable with them, because it's really, we know things are always going to potentially change, even if you have all the best laid plans. But really understanding the character of who you're investing with, and see if they're able to withstand some of the challenges that may come. And so working with him, I never had any issues. I always got paid, and had a hiccup or two, but we were able to work through it. And we both were able to benefit from the relationship from an investment standpoint. So it was really got me started. And a lot of it, obviously, having the right contracts in place, with lawyers involved, is, get the promissory notes in place. So, felt very good in terms of legal protections in place, and it's all worked out. And down the road, I've done more with him and others after going through that process. That was a little uncomfortable to begin with, but that was my entry point, because I didn't really know anything about real estate all that much. But the beauty of it was that through that relationship and through his expertise, he was willing to help me with my first purchase. And through that process, he helped me do what he did, was to buy a discounted product, a discounted house that was on a short sale, and was able to negotiate a property with the bank to buy this property. And the homeowner had been there for 30 plus years, and due to unforeseen circumstances, couldn't pay for it anymore. And the house was upside down, right where the value of the home was less than what he owed. And he was just trying to move on. And so my partner, who I lent money to in prior deals, helped me sort of figure out, the process to buy it. I bought it in all cash, right, to get it cheap. Went through renovations through team, and so I'm very active in this process. And we got it rented out, fixed up, and then rented out in a very short order. And then 6 months down the line, I was able to refinance that property because it appreciated in value so much. I literally got all my money out and then some, and it's still a cash flowing positive asset for me today. And so it did require a heck of a lot of work, and going through that experience was good. And, dealing with, obviously, negotiating with the bank, and certainly getting the renos done and learning about the leasing process and all that was a very much a learning environment, a lot of work. And so it was very profitable. But in the same respect, I learned that that really wasn't what I enjoyed. I didn't love that process completely. I certainly liked the financial arm to it. It was a good learning experience to recognize that really wasn't for me. I didn't want to be in that and be with part of the construction so much. It just wasn't in my interest level. So but it was a great learning to kind of go through that exercise. And so that was my first direct ownership of a property and it's really still a great asset for me today. But it introduced me to a option that was growing at that time was turnkey rental properties where there were other operators out there who would do that heavy lifting, identify the properties, renovate them, and then put them on the market for investors to buy and have property managers in place and could manage the properties for you, obviously at a cost, right? They're not doing things for free. And so it just made it easier for people who want to get in, who maybe were less enticed to go kind of manage the renovations themselves and do some of the heavy lifting. So we had people who were doing that, who knew the areas and I did this outside of actually my area in Connecticut, outside in different markets in Texas and Tennessee and in other areas. And so built it out that way. And I used my family bank to purchase and do the down payment for those properties and get a formal loan for the balance. So, and then a lot of the cash flows that come back will, funnel to the family bank and also to pay down the note that I took on for the rental properties. But really, really a great way to get into, and obviously it's important to work with who are these turnkey providers to know them and how they operate, what's their experience, their sort of history on productivity, and recognizing that, listen, rental properties have their challenges too. Tenants can be bad, even if you vet them. And so working with those and learning about the turnkey providers and property managers is so big because they're working for you. And unfortunately, not all of them are good. And it takes some effort to learn and figure out which ones you can trust and are hopefully looking out for your best interest. So I sort of went down that path and secured a bunch more properties in that manner instead of kind of more the upfront heavy lifting approach I took with my first property. And so I built that up over time. I still have a whole host of properties that are under my ownership and certainly are producing some cash flow that helps sort of fund back to the family bank as well as paying off the note from the banks formally. And so as I sort of migrated and learned more about different other opportunities in real estate outside of just direct ownership, and now I still secure some duplexes and single families, learning more about some larger projects like apartments or a mobile home park. So, as I got into learning more and meeting more people, either in the financial space or in real estate space, learning that some of these opportunities existed. I never knew about them, right? I couldn't personally get into an apartment and buy it myself, at least not a large scale one. So started getting connected with different types of providers and operators who were pulling investor money in terms of syndication together to invest together and purchase either apartment complexes or mobile home parks. There were cases, self-storage. And so there's things that are out there that I can get into. So my first was in an apartment complex and being part of that. And so putting in my share as a limited partner. And so they would act as the operators were the general partners. And so in that case, you would provide that money and you would get a preferred return as part of it. Could be, say, 6%. And then you would share in the gains of equity in the property. And so it was a little bit of a risk to it from a perspective that really didn't have as much control in terms of what happens there. You had handing it off to an operator. And that's why it's important to get to know them, learn how they operate, to see what you're investing in and their track record. But they own the project and they're the ones doing the heavy lifting and managing all the renovations and working with the property managers for those large apartment complexes. But you, as an investor and a limited partner get the benefit of cash flow, certainly even tax advantages to that, because you're securing an asset that could come with depreciation and write-offs is associated with operating the property. And then when they eventually sold, hopefully for a higher price, right, they would share in the profits of those apartments and the sale of those down the road as they refinance or just really sold it. So those are also ones that are an option for people, especially if they want to do some of the heavy lifting. Certainly for buildings of that nature or sizes of those properties, maybe it's not even obtainable to do on your own for most people. But if you're an accredited investor, there's a lot of options here in terms of being able to leverage other teams and play a limited partner role in this. So there's less work along the way, more just kind of upfront evaluation of the investments and the operators. Still requires work. It's not completely passive, even though when you look on the tax form, it is considered passive income or non-active income. There's still work to do. So it's not a set and forget thing. So it does require effort, but now you can get into bigger projects and diversify in terms of types of real estate to get into. So it could be a great avenue. And we've already had a couple guests on that we'll point to here in the show notes on some episodes that talk about it. And we're going to continue to have more on to share different options out there, because it isn't just apartment complexes. You can do senior housing, like I said, mobile home parks. There's a host and variety of real estate options for you to consider. But, that's why it's so good to kind of learn about the different operators and where their niche is, where they focus, and, what do they know about this specific real estate option? And, why are they positioned to have some sort of advantage or unique way of doing things? But just another way to leverage. And again, I use the family bank to help fund these things, because the dollars that come back, obviously you can funnel back to the family bank, and it opens up more money to invest along the way. And so kind of using that and methodology to kind of have the financing arm for the investment kind of come from the bank, my own bank, and then family bank, and then use it for these types of investments that create some cash flow and hopefully growth. And ideally, tax benefits are buried in there too. So it's stuff that certainly you want to get aligned with your accountant too, to help ensure that all those things are addressed properly in your tax return. And that's for another episode that we're not going to cover too deeply today, but always get your CPA or accountant involved in these sorts of things so they're properly recorded. So really, this is just kind of tip of the iceberg with these sorts of things. So here covering just just a basic variety of types of ways to get into real estate. But what I would encourage people to do is to start getting in to going back to the analogy of my son playing baseball, get in the batter's box and take some swings and kind of learn a bit, right? Get in there and get uncomfortable, because the more you get into these things, I mean, real estate, like again, it can seem daunting, but once you start getting into it and understanding it, it becomes a lot easier along the way. And it's helped me sort of not be fearful as I go to explore areas I don't know about. I have at least a good base to draw from, to ask questions and learn more and be open to it, and learn the types of people who are doing them, so that you can get comfortable in the areas that you want to invest in. And then you can find your area of what makes sense for your financial goals and what allows you to sleep at night without super stress. And we don't want that. So, and maybe there's areas that are more fun for you to invest in that draw interest. So hopefully this was helpful. And certainly if you certainly add more questions around this, certainly reach out. I'd love to chat about these things, share my experiences with them. It's my perspective and my own little journey with it, but it's been fun, and I certainly anxious for it to continue forward and get into a lot more deals that hopefully are certainly beneficial to our communities, but can also help us build our wealth. So looking forward to future episodes, and leave some comments and questions, and we'll see you on the next episode of the Radio Fried podcast. Thanks for joining me on this episode today. I really am grateful for you as listeners to the Perennial Pride podcast. I hope you're getting some tremendous value out of it and hopefully pushing you along your journey to financial freedom. I put this podcast together really to help you get more educated around your finances so that you feel empowered to live the life that you really want. And if you like the content that you heard today or watched, then I would encourage you to go to my website, perennialpride.com. There's tons of other content there. And you can access my book, Wealth Beyond the Numbers. You can buy it there on my website. It's a aggregation of a lot of great tips and tools I've learned to not only build my wealth in my accounts, but build wealth in my life and abundance and joy, and something that has a lot of my experiences in the journey that I've been on personally. Hopefully that can be also of value to you as you sort of move forward. So thanks again for being a Perennial Pride listener, and we'll see you on the next episode.